Thank you everybody for joining me today. I'm Joel Silverman, Silverman Law Office. I'm a tax attorney here, one of our many tax attorneys. And here today we are going to talk about federal and state tax audit issues. Now, first of all, it's really important for everybody to understand we live and breathe tax law. It's what we love to do, and taxes affect everything in our lives. Not just the tax returns themselves, but they affect our businesses, our estate planning. They affect sometimes whether or not we buy a home and we can get the mortgage interest deduction. But even more importantly, it really affects your family and how you develop your family. So that's why this webinar series is so important to us and it's so important to our clients. Our mission is to make sure that every one of our clients receives the best attention possible, and so that we can help you protect your family. So thank you for joining us today. Again, this is our second series, or second part of the 5-part series, and so let's get right into it. Oftentimes, we get asked in an audit if you end up with a late filing penalty or an underpayment penalty because you didn't pay enough taxes or you didn't claim enough in taxes on your tax return, can you get that waived? And the answer is yes. Depends, there are certain circumstances, but yes, you can get it waived in many instances. So let's get right into, though, what usually happens in an audit. The IRS or the Department of Revenue starts at their desk, and they're looking at your tax return, and they're looking for key flags or indicators as to whether or not your tax return should be audited. Now, at the federal and state level anymore, it's now done just on a computer program. So literally, these flags, as you used to hear them called, it's a scoring system. If you have enough items on your tax return of a certain type, you'll tend to get audited. Sometimes you just happen to win the lottery and get the lucky chance of your life to spend a day or multiple days with a state or federal tax auditor. Yay! So let's talk about that time when you are the lucky one, right? The lucky ones are usually the easy ones because they're just randomly drawn audits. You won the lottery. Not the good lottery, but the bad lottery. And so you get through it, you get all your paperwork together. Remember to keep all your paperwork. It's now 3 years. At minimum, I recommend all my clients hold it for 5 years because the IRS and the Department of Revenue or State Taxing Authority can extend that statute by 2 to 3 years if they want. Now, there are certain guidelines for that, but again, just think of that extra extension, and if you don't have those documents, then you can't protect yourself. So what are some of the things that are most likely audited? Number one, if you have a home office, that adds up points on your scoring system as to whether or not your return is going to get audited. Number two, unreimbursed employer-related expenses. So if you are doing something that is related to your job that your employer won't reimburse you for, and you then write that off on your tax return, well, that's a red flag. That's going to add more points to your scoring system and increase your odds of getting audited. The states have become the leading agency to audit, not the feds on that issue, by the way. Energy credits. Energy credits have become a big deal. We're seeing that a lot. There are federal and state energy credits for fixing your house, for buying energy efficient vehicles. So those have become highly auditable at the state level, especially when it refers to your home. So be prepared for those. Residency. What state are you a resident of? That's a huge question because a state like Montana, we have a 6.9% income tax rate. California is over 13%. Nevada, 0%, or Wyoming, 0%. So sometimes somebody's making enough money that they're going to pretend to be a resident of a state with no tax, or like Washington even, where there's no income tax, yet they're living in Montana. That's a really big one. We have seen some very large numbers coming from the state of Montana and the state of Idaho on these residency audits. And by the way, New York and New Jersey are two of the most heavily audited states for residency, as well as California, number 3. So watch out if you live in those states and you're thinking about changing your location from where you're going to live and claim residency. There's a very clear, defined process to make that happen. We can help you with that. Next, substantiation. And you ask, what the heck is substantiation? If you're going to write something off, you have to have a receipt for it. Well, what do you do with the receipt? If you don't keep a copy of that receipt and you end up in an audit, the government can say, you are the one who is supposed to maintain that paperwork. You didn't, therefore we're going to disallow it. I've seen that happen many times, and it costs people thousands of dollars. So please, please, please keep those receipts with your tax return for at least 5 years. So now, next one is, how do you avoid an audit? Well, like we said earlier, sometimes you can, sometimes you can't. Sometimes it's just dumb luck. And if you're one of those people who's just that unlucky, well, don't go buy lottery tickets, right? So how do you avoid getting audited? The number one way is have a qualified tax preparer do your return. Get a CPA, an enrolled agent who really knows what they're doing, and sit down with them. Spend considerable time on your tax return asking, is this right? That's a big thing, right? You need to know what's on your tax return, why it's there, so that you're at least somewhat educated about it. Also, at the end of the year, do some tax planning with your CPA or your qualified tax professional so that you are getting the right advice for the coming year. Taxes don't just happen. Taxes happen to you for a reason. Learn the game. Learn to be educated. We can definitely help in that avenue. So when you do end up in an audit, what do? Do you play the ostrich game? Do you stick your head in the sand and pretend like the government's not going to kick you in the rump while your butt's sticking up in the air? No, you want to call the qualified people to handle it. You can give us a call. We help a lot of people through tax audits. All sorts of tax audits, federal, state. I spent 6 years working for the Montana Department of Revenue handling complicated tax audits for partnerships, S-corps, and individuals. We can help you. My team is here ready to help with audits. Don't go in afraid, go in prepared, go in with the right team, have your CPA there, your qualified tax professional, have your tax attorney. Make sure your team is ready for this because it makes a huge difference. Also, what happens after an audit? After an audit's done, whether or not you agree with the auditor, they're going to issue their audit findings. What do the audit findings do? They issue what is the final determination from that agency as to what your tax liability is going to be. With that final determination, you have appeal rights. Don't screw up and miss those deadlines. If you don't appeal that timely, you're SOL. You lose it all. So don't lose those rights. Keep your rights. Protect them. Make sure you don't lose the appeal. Get that information to us. We can get that timely filed. We can get everything filed properly so you don't lose that. We want to protect you. Please let us help. I'm Joel Silverman. Thank you for joining us today. We're going to give you a special offer where if you mention to our team that you watched this webinar series, we're going to give you 50% off on your initial consultation. So give us a call today. Don't hesitate. We look forward to meeting with you and helping you and your family achieve everything you hope.